Harindra Kumar, Managing Director, Institutional Equities with Elara Capital joins us. Harindra, good morning and thank you for joining us. Harindra, in a jiffy, Nifty is down more than 200 points and we've lost nearly 2.5% for the week gone by. Do you think in the short term the party is over?
I would not say the party is over. It would be a period of consolidation. We've had a sharp bounce from 5,200. It needs to consolidate before the next move up. The liquidity rally takes it to the next level. So I think it will consolidate probably for the next couple of weeks.
Worry about the flow picture because of late FI selling has reduced, DI selling has only intensified, and now foreigners are also creating short positions in Nifty futures.
Yeah, that could be momentary, Nikunj, but if you look at what's coming out of China, Japan and some of the other emerging markets, and you look at crude as well, where it is positioned, if it weakens any further, you could see a good amount of rally in the emerging markets. So my guess is that the momentum is strong and it's a trading market. So I think it's better to be on the longer side than on the shorter side.
Harind, what's the sense that you're getting about the banking pack and the way the rally has really reversed last week with a good 6% cut coming in for the bank Nifty?
Yeah, we had a lot of results coming up last week as well. If you see, it's more of a sell-on news. But there's two sides to the whole story. If you look at it on the PSU bank side, on the core banking front, there has been a marginal improvement in performance, be it the margins, be it the growth. Obviously, the key worry area has been the NPL, but that's pretty much discounted in the market in terms of the the worst of NPLs that the market is pricing in. So incremental positive will be rewarded for PSU banks. I think possibly the corrections, the market could consolidate and there could be a fresh wave of buying for PSU stocks in the ensuing liquidity rally that we anticipate.
Harindra, why has the market opinion changed? 6 weeks ago, there were no takers for PSU banks or cyclical stocks. Everyone was nervous about NPAs. Everyone was convinced that Indian economy is nowhere close to its bottom and don't go close to cyclical stocks. But even the economic data has not changed. The outlook for cyclicals and for banks has changed.
There are 2-3 aspects here, Nikunj. One is on the liquidity side. If you look at it, the PSU stocks were extremely oversold. There is no incremental selling that was coming over the last bear market, or the price cuts that we were seeing. Secondly is that you are anticipating that it's a 4-year downturn and you are seeing an impending change in government potentially. So the market is trying to anticipate a recovery rather than see a real recovery. I think these are two factors that are in play underway. So the risk reward is in your favor. One is that the stock doesn't fall any further lower. Middle upside would mean phenomenal gains for you as a trader or an investor. I think that is pretty much in trade, and it will continue till the elections. Maybe the disappointment will come on the election day, but not earlier than that.
Harindra, excellent numbers coming in from Tata Motors. Unfortunately, post-market hours, but the ADR jumped almost about 4% in Friday's session. How much more headroom do you see in the stock price, and could one still buy into the stock?
So there is a small trading window up to the next quarterly numbers, my guess is that. But now it is seeming to enter the expensive territory in terms of the global car makers bucket. It's 4.5 times EV of EBITDA in terms of its GLR numbers. It is seeming to be a little more expensive, and its peg is coming to closer to 1 for the next 18 months. So my guess is there is a trading momentum which will take it up to the next results, but I think investors will look to sell around that point of time.
But look at the P multiple for Tata Motors, and it is still the cheapest Indian auto stock, and based on FY14 estimates, I'm not looking at FY15, based on FY14 estimates, it is trading at 7-8 times.
Yeah, actually, Nikunj, you have to segregate both the domestic and the global PEs. In terms of global PEs, it was because of that it is subdued, not because of the local arm. And given that the profits are only coming from the global arm, we need to look at it from the global PE angle and how much is Audi, BMW trading at. So we are on the expensive side in terms of that. I think that is a key factor to look at.
But Audi and BMW are not growing at 20%. They don't have operating profit margins of 17%. But JLR is growing at 20% plus, and it has operating profit margins of 17% plus.
Yeah, I think this is a one-off quarter. If you see, there is some write back that's come up. So obviously there is circumspection in terms of whether this is going to sustain over the next quarter and in continue. They had a few launches, in the Jaguar segment. So out of the 3,000 units moved to 7,000 units. So that pop we'll have to see whether it will continue on a sustainable basis, and that's why I inference that closer to 420, 430, probably the stock should top out.
Harind, what's the sense that you're getting about Tata Steel, and especially the run-up that we've seen in anticipation of the earnings this week and after the ArcelorMittal earnings as well? Are you guys as well expecting a strong performance from them?
Yeah, so again, like we discussed just priorly in terms of PSU banks, steel pack also falls in the same bucket, extremely oversold, playing on the global recovery on the incremental positive news side and valuations in favor for them. So my guess is the results will be seen favorably by the market in terms of Tata Steel, and any incremental positive in the stock could only go higher. So we would say if there is a correction as well, you should look to accumulate Tata Steel.
Do you think mid-cap IT stocks have a long way to go? Names like Tech Mahindra, Mindtree, to a large extent KPIT Cummins, because post numbers, even though large cap IT stocks have been slightly toppy and choppy, it's been a one-way street for quality mid-cap IT stocks.
I think it's time to segregate to have three segments in tech stocks. One is the larger one, the TCS, Infy, and Wipro. Then you have the challenges in terms of Mindtree and Tech Mahindra, which we're trading at probably a little more discount to the larger ones, and then you have the much smaller like NIT Techs and Infotech Enterprise, etc. Starting from the bottom, they are a 6 to P, 9 PE trade, so you buy at 6 PE, probably sell at 9 PE. The other ones are probably trying to catch up and probably top at 12 to 13, and then you have the TCSs which are trying to nudge higher than 20 plus. So you can trade these PE bands comfortably as long as earnings hold up. Beyond that, I don't think there's anything structural that's changing in probably Mindtree or Tech Mahindra. So as of now, I think it's more than PE, it's more earnings that's leading the rally for these stocks.
Mahendra, what is your take on ITC? It is still enjoying the reputation of being a defensive and a classic halo stock. But for those who bought ITC a year ago, they've not made any money. At best, ITC has been a market performer.
Yeah, absolutely. I think if you look at the full FMCG pack, it is going to struggle over the next 12 months in terms of perception, in terms of valuation. The Economic Times, of course, also did a study today that the leading stocks are at 40,000 index levels. That means the incremental gains from here on could be more tougher to get by. So my guess is people will hold it in portfolios, but to expect outperformance would be asking too much for ITC from here on. Yes, it will do better than the rest of the pack, but to do better than the rest of the market or some of the stocks that we've been discussing, I think that will be a little difficult.
Some other names which looked good all of last week, and a couple of the pharma names again sprung up. So clearly the defensive tilt of the market continues. Harind, what is it that you're liking from the pharma pack right now?
Yes, Dr. Reddy's continues to be in a strong, uptrend from here on as well. So Sun Pharma is a secular buy, but I think Dr. Reddy's is shaping up much better as a strong contender. We have to look for some opportunities on the mid-cap space yet, but clearly on the large cap, there is no incremental delta from here on, so we continue to remain holds out there. But to find fresh buys become extremely difficult in the pharma stocks.
What about Aurobindo Pharma, DVs? Both of them are part of the mid-cap pharma basket, but the common theme here is excellent set of numbers. Aurobindo reacted to good set of numbers on Friday, and I guess DVs will react today.
Yes, so Aurobindo has been on the comeback, of late, but obviously the volatility has not been to the comfort of investors. So probably they'll wait for one more quarter before actually they'll start to buy into the story. So yes, it could be firm, but I think the pop will come only after the next quarter numbers.
About what could work for Aurobindo Pharma is the fact that the US FDA problems for the moment they're sorted out and they're sitting on a lot of capacity. So if demand indeed makes a comeback, operating capacity really could be an advantage. Harin, on the flip side, let's look at machinery stocks. First, BHEL, and then now it's Crompton Greaves. Looks like for the moment, even the market is pricing in some kind of an economic recovery. Based on Q2 numbers, none of these machinery stock capital goods stocks are anywhere close to the earnings bottom.
Yes, because they're largely linked to the power space. If you look at it, some of the other stocks that I would like to bring in here is ABB, Siemens. They are seeing a small pickup in their export order book, which is similar to Larsen and Toubro. I think within the cap good space, one is the locally inward looking and one is externally looking. I think there is a small trading window or investment opportunity in some of the other capital goods names. But for someone like Bhel or Cummins to bounce back, there has to be a secular improvement in the power space.
Give me a mid-cap stock where you are confident of a 20 to 25% appreciation in the course of next 1 year. Harindra, that question was for you.
You could look at some of the media stocks in terms of entertainment, ENIL. I think with the radio phase 3 coming up and improvement in ad numbers, the stock could continue to do very, very well.
It's almost sitting at 63. Harindra, last time when rupee started depreciating, we saw a huge correlation trade in metals and in all those import substitution beneficiaries. Do you think a similar kind of a trade will work out this time around as well, where names like Tata Steel, Hindalco, Motherson Sumi, Bharat Forge, they will tend to benefit?
No, I think the rupee trade is not going to be so sharp at this given point of time. Around that time, the movement was extremely sharp. So this is more like a retracement that currently we are seeing. So I don't think trades will get built on this rupee move. But for all the other fundamental reasons that we've discussed through this program, I think metals and some of the other stocks will continue to remain firm.
Harendra, we've talked about Tata Steel, but what about other names like a SAIL or a Nalco? What else do you like from the metals basket?
So on the metal basket, obviously there will be a catch-up trade for SAIL as well, which we've seen with the stock moving from 50 to 60 levels. I think given that there's not enough liquidity in SAIL, any marginal improvement would also mean that SAIL will continue its journey upwards. So yes, the steel pack per se is looking interesting at this given point of time. So look out for any incremental positive news flow from SAIL.
Harindra, last time when US bond yields had gone to 2.7 and 2.8, it led to a massive unwinding in emerging markets. Guess what? Dollar index is up and US bond yields are also moving up once again. So do you think we could be staring at some more unwinding for the moment?
Yeah, so the short-term trade, like we've discussed, the consolidation weakness could get timed in. But I think in terms of the QE tapering, we are looking at somewhere closer to March, April. So, given that the new governor has just come in, it's going to take some time. So the risk-on trade, like that you mentioned, I think will continue closer into the early part of next calendar year.
But even though you are short-term bearish on the market, you clearly are of the view that you would like to buy into cyclicals and especially banks on every decline.
Yes, Nikunj, you got it bang on. I think, what we see is that we might see the markets breaking new highs, but I'm not saying it's the next bull market. But new highs means, yes, there is a momentum trade that one needs to catch on to because the fundamentals are not so robust. The only way to create alpha and create incremental returns is to probably be long on momentum at this given point of time.
Okay, Harendra, good chatting with you. Really appreciate you taking the time out and speaking with us.